Hello, and welcome to our Genesis Financial Services session. We see three areas of focus for banks over the next 2 to 3 years. Firstly, enhancing ability to serve and digital experiences. Second, increasing frequency of client contact and changing contact mechanisms. Third, there's a paradigm shift for flexibility, resiliency, and employee engagement.
And we'll touch on all three of these areas as we discuss these changes in client preferences, new technology, and working models that are happening as we speak.
Now, delivering personalized digital banking experiences is critical. And this might seem both obvious, but it's also rather corporate speak. And here's what we really mean. Clients tend to assess the values of a bank by the quality of the interaction that they have with the first person that they actually speak with. Now, ensuring that that experience is excellent and linking it seamlessly to a great self-serve digital experience, well, that's an innovation priority. Sabine, can you tell us what you're seeing with your banking clients?
Data and people are usually key elements to getting better outcomes in financial services. Humans are social, they want real-time, human-to-human contact and interactions. And to be successful, banks should establish both digital and human interaction channels. Bringing humanity back into the banking sector and putting empathy into action requires executives to think of ways to do better banking. We think these solutions will be technologies like cloud, artificial intelligence, and machine learning. So this does have an impact. For example, banks will repurpose and continue to redesign their branch networks. There is no one universal correct answer to what these new connected channels look like. And to illustrate this, think about French consumer banks. Their model is we're keeping the branches, but we are changing the role of the folks in them. We'll equip branch personnel with new training, connectivity technology, and put local humanity into digital channels. That's a more definitive trend than what we see here in North America. Now, onward to some numbers. This here is global financial services contact volumes. In these days of digitally enabled self-service, it's interesting to note that actual institution client contact is growing rapidly. What's changing is the channel. And in many ways, the change is a function of both of new platforms like chatbots, voice bots, but also the segments that are driving use. Most of the bank client contact in the Gen Z millennial segment is online or mobile. And the segment uses these channels a lot, far more than the boomer generation. So David, what do you see as key drivers behind this growth?
So financial services are transitioning from delivering products and services through physical distribution to a client experience that's primarily powered by digital capabilities, convenience, and alignment to client needs and preferences. So as digital experiences become more ubiquitous, banks face a new paradigm where consumers expect immediate, contextual, and personalized solutions. And actually, that means more contact. And if banks don't have aligned contact mechanisms, then clients will simply lift the phone and just call. And that can be a problem, especially if banks are wrestling with retention and have challenges filling all of their open job recs. Now, at the same time, clients also want the ability to interact with their advisors through their own preferred channels. They want financial advisors to know them, be there at the moment of truth, with the most personalized solutions. And again, that means more contact volume and channel use.
Yeah, David, meeting these volumes and technology demands is not easy. Bank executives get these very clear goals. Turn our architecture from spaghetti into lasagna. Or I have a customer express to me, turn our dream into a vision and help us deliver more business capabilities. Executives will say it will be easy to open an account with us as it is to get an Uber. And these executives know these are really hard and multi-year journeys. And on top of that, there's also a fresh challenge, people. It really is getting hard to acquire and keep great people. Banks are wrestling with retention. and employee satisfaction.
And that's a great point. And obviously, the pandemic has led to a shift in employee behaviors, expectations, how workers manage work-life balance. And obviously, there are strong signs, encouraging signs that there's a real return to the workplace. Banks, of course, still face really tight market conditions this year. I heard a senior bank executive say a couple of weeks back, never in my 40 plus years of banking have I seen labour shortages at the level that they're at right now. And Sabine, are you seeing the same thing?
So, David, think fewer suits, more hoodies. And this doesn't mean a focus on dress code. It's a mindset. And the importance of work environments also reflecting how we live. Banks see the key competitors for top new talent, not as other banks really, but as Google or Microsoft or the tech startups. And on top of that, employees are no longer restricted by geography to choose their employers. So attracting the talent has also become a challenge. And with the acceleration in digitizing the modern workplace, training is important. As an example, video advising. What seemed unthinkable just a few months ago in branches is now a reality. So, David, employee engagement has become just as equally important as customer experience. 1 out of 2 companies are working on reducing their turnover rate various ways, with flexible hours, increasing compensation, adding agent analytics, supervisor coaching, career planning, and gamification.
Yep, I see that and totally agree, Sabine. The future of work, well, it probably means there's a continuing emergence of like full-time hybrid working models, if that makes sense, and increasing demand for the multi-channel work platforms that enable that, digital, video, voice, etc.
Yeah.
Sabine, what are the key takeaways for banks, for credit unions?
I think these are the executive areas of focus. What's our client communication strategy? How can we integrate service, sales, and marketing across .com, mail, phone, mobile, and branch? And for many executives, they are focused on creating a great experience so that their CEO stops telling them that their kids are having a better experience opening an account with a fintech app on their phone. Another very important focus area is ROI. So this is what we heard from a new CEO in Italy. We've invested so much into digital. We can get cost savings, but the key for our shareholders is getting more revenue out of the investment. It is important that you spend time building your ROI before any project and commit to making reviews on how you're tracking on that ROI. And that is through your multi-year journey. And you have to keep adjusting and improving in order to hit your goals. Personalization, that's another one. That means personalization for treatments, for offers, for products, and communications. And often that requires great joined up data environments with customer journey mapping. Finally, one last one, very important, employees. There is a war for talent out there. So new generations, Gen Z especially, are more likely to choose workplaces that demonstrate commitment to inclusion, sustainability, and diversity. So David, what do you recommend leaders do to ensure that they properly structure and prioritize their CX strategies?
That's a great question, Sabine. So here are just some thoughts. First, get to the cloud. You will need the partnerships, the efficiencies, the ecosystem that's being developed and built. You're just going to need it. Then think about the milestones from clients' eyes. What are the tangible experiences that are going to be compelling and will make you want and desire a product or service? Think about speed. Traditional initiatives at banks, they take 2-3 years to deliver. And banks now have to shape new digital-first products and services that customers want, but they want them now. And we can't really wait 3 years to deliver. Connectivity remains important, and have great connective tissue, not just between a bank and the client, but don't forget the third element, the banker and the advisor has to triangulate. Mystery shop. Now, if you're JP Morgan Chase, I don't mean go look at Bank of America. Look at what banks are doing in Turkey or in Denmark or in New Zealand. Look out of category for sure. There you'll find these new seamless experiences that people are enjoying. And then finally, research. And I don't mean keep asking your clients what they want from a bank, because they'll always tell you the same thing. They'll say, well, we want better service, lower fees kind of people. Rather, and instead, ask clients about the cool, unexpected experiences that they've been having in their daily lives, and then go see what it is. How does it relate to your offering? Can you copy a feature or a function? I think that's the way forward. So, folks, I'm afraid that it's a wrap from Sabine and I. Do hopefully take some great points from what we've been through here. We've got global experience, expertise here at Genesis. We're here to help. Please connect with Sabine and I directly if you have questions, or connect with your local account executive. Thank you very much.